Thanks, Tim, and thank you everybody for joining me this morning. We can pass through that pretty quickly. Just a quick background, I'm Nick Pollock, I'm the Chief Commercial Officer for K2fly. I essentially run the software business, so I'm in charge of organic and inorganic growth for that business, and also the strategy in and around our products and services. So I have a long background in enterprise software globally for big players like Oracle. The last 15 years in mining software, which is a big focus for us, for some of the biggest and most successful mining software businesses around. Have done a few successful exits to private equity and then hired by private equity. So worked across private equity and listed companies. And then more recently have done postgraduate qualifications from Cambridge in sustainability, specifically as applies to the mining industry. Next, please. Just a quick snapshot of the company. We've obviously we're on a very nice path prior to COVID, and then obviously took the usual COVID dip, but obviously we've bounced back very, very nicely since then, and the share price has pretty much tripled, which is really good news, and sort of back to where it should be, if you like. I suppose, interestingly, at the moment, in the last few days, we've had some downward pressure. We just had a whole bunch of options mature at 25 cents, and we've been trading around 35 to 40. So they were all taken up, which put another 650,000 cash in our bank account. And that will obviously create a little bit of downward pressure in the short term. So that bottom number there of 3.1 is probably more like about 3.5 at the moment. So we're very, very healthy from a cash perspective and trading nicely. Have a very, for a business our size, a very good board. Jenny Kutry, our chair, is basically an ex-ASX and ASIC lawyer and senior person in there, so that gives us great governance. Neil Camby provides the chartered accountancy and financial leadership that we require, and James Deacon is a senior person in IT advisory. Brian Miller has been in the software business longer than myself, about 30 years, and also has enjoyed success in enterprise businesses and sales of those businesses. Next slide, please. So there's two parts to our business. The one we're focused on today is the software as a service business, which at the moment is growing rapidly and sort of makes up an increasing share of our revenue. And that's always been our strategic intent, is to create and grow a software as a service business. We have a consulting business, which will continue. That's largely targeting asset intensive businesses, particularly infrastructure and utilities types businesses. But really the focus of today's discussion is on the left-hand side there. You can see that just that smattering of companies that are customers of ours is pretty impressive. A lot of those have signed up in the last 12 months, so our growth has been extraordinary. So we're definitely growing organically through those customer wins, but also growing inorganically. We've made 3 acquisitions now. We completed a recent one 3 weeks ago called Sativa, which has brought us a lot of capability in terms of additional software products that are directly relating to what we already do and provide these guys, and give us the ability to grow our share of wallet within those customers. Next slide, please. Just a quick look at our performance. On the top left-hand side, for a software as a service business, annual recurring revenue is key. You can see a very nice shape in that in terms of the growth sides there. Our quarterly invoicing, another nice steady shape there as well. Top right-hand side, you can see the other metric we look at ourselves by is total contract value, which is a function of the annual recurring revenue that you get in your subscriptions. And that's a beautiful thing because it's very predictable. And obviously the bigger the TCV refers to the length of the contracts that we're doing. So our average is between 3 and 5 years now. So that gives us a nice forward projection and reliable revenue. Bottom right-hand slide or picture there is looking at our cash flow. So the last 2 quarters, starting in Q4 last year, or last fiscal year, we've broken through the cash flow positive mark, and that's given us a huge boost as well. So we expect that to continue. Next slide, please. What we address in terms of the problem we solve, and in this short space of time, it's going to be hard to go into too much detail, but we are addressing the increasing challenge in the resources in all industries in and around how they report and govern, particularly their environmental, social and governance aspects, which are under increasing pressure from many sources, not least of which shareholders and particularly finance, but also the wider community and their expectations of these companies and how they behave. We've seen some really good, bad examples of behaviour lately in terms of important cultural heritage being destroyed in the Pilbara, Western Australia, tailings dams failures in Brazil resulting from tragic loss of life. And this is just, and that's just really amped up the pressure on these organisations to a better job of governance and reporting and disclosure. Next slide, please. So our business provides software. So we provide enterprise software, which focuses in around technical assurance processes and support of global standards that support social governance and environmental, social and governance outcomes. So we provide the software platforms that can standardise across organisations in how they report, govern that information and who's done what when, and then disclose that to the relevant stock markets and shareholders. Next slide, please. Our business has grown dramatically globally. Most of our contracts are with corporate, so that is a massive differentiator in our business. All of our contracts, or particularly most of our contracts, are at corporate level, and because the information has been reported through the annual reporting process or in disclosures to shareholders in general, we pretty much get all material sites day one. A lot of this has been driven by a mineral inventory solution, and that is racing off the shelves at the moment. We currently operate out of Perth as our head office. We have operations in South Africa, in Centurion, and a sales office in Denver, Colorado, which we opened early this year. Our business has transitioned in the last 12 months from being an Australian business to very much a global business. And you can see on the top right-hand side there, less than 50% of our revenues now come out of Australia. Next slide, please. Just what does that mean? These are not all of our customers. It's a snapshot of our customers, but you can see some really household names there. Rio Tinto is a corporate global customer in resource inventory. And these are, as I said, these are all global deals. We have a strong position in Europe in the industrial minerals space with Sibelco and Imerys, who are two of the top 10 industrial minerals companies around the world. And then in North America, you can see Newmont as the biggest gold miner. Vale in South America is the world's biggest producer of iron ore. So very nice spread of customers globally. Next slide, please. Just to put that into some context, essentially, if you look at the gold miners, the top 10 gold miners in the world, of 5 of those top 10 are using our solution to report their mineral inventories to the stock market. So that's an incredibly important and valuable piece of kit that we provide them. So we're reporting well over 50% of the gold ounces that come out of that top 10 suppliers in the world. Very important position for us to be in to grow our business within those organisations. On the left-hand side, when we look at what the big names in iron ore, but also increasingly multi-commodity, Vale, Rio Tinto, FMG, all have other businesses. We've got a very big share in there in terms of mineral inventory reporting, but also the land management and the environmental, social and governance things we're doing with those organisations. Next slide, please. So the key thing here and the difference between us, above there, what you can see above there is our solutions. And if you look at the right-hand side, which is the resource inventory solution, that talks to a traditional valuation model for mining companies. So what mineral inventory do I have in the ground? Obviously, it's a very complex process to report that because it's underground and can't be seen, highly governed, but it's mineral economics 101. I times the inventory, times the tonnes grade and prevailing price of the day to get the value of the company. Increasingly though, and this is our bet, these companies are being valued or value being destroyed by how they behave in their communities in relation to environmental, social and governance areas, access, communities, et cetera, is massive for them. So that's where our growth lies. Next slide, please. Social license to operate is the number one thing keeping mining executives awake at night, particularly CEOs. That's been the case for 2 years running. So that just sort of validates some of the stories that we've seen in the media recently, but also why we are important to these guys. Next, please. So just to wrap up, essentially this is our solution offering. We provide solutions in resource inventory, which is our most successful product, but also across the gamut here. Dams and tailings will be released at the end of the year. That's a really important solution. Community and heritage, we've seen a lot of that in the news lately. Land access is a constant challenge for mining companies. and then obviously rehab and disturbance. Next, please. Yeah, so essentially the thematics here are we are a tech company on the ASX, rapidly growing, playing in enterprise license software globally, in software as a service, recurring revenue streams, with a strong thematic in traditional mining, but also moving into the growing needs for environmental, social and governance needs. So we can see our market growing significantly as it has been, and then we will move into other spaces like oil and gas, etc., through our partnerships. That's it. Thank you.
Thanks, Nick. I remember your presentation back in early May when you were previously on, and congrats on the share price and those contracts that you're winning. It's funny because we've been looking at the battery chain, which is obviously driven by the need for electric vehicle manufacturers to have kind of clean inputs, whether it's lithium and nickel and graphite, and it's driven from the likes of Tesla. So my question is, you know, you've got some contracts with the big guys, and I remember those contracts being quite large. And what does it mean for the little guys, the little lithium players who want to know their ESG footprint? How can you help them?
Yeah, so that'll be right now. The way we break the market up, Tim, is we look at sort of 3,500 mining companies in the world. Our focus right now is on the top 500 and probably 100 particularly when you look at those names. So the tier ones, sort of 6 to 10, depending on any time of day of those, which we're working with most of those already. We're unapologetic for that, you know, so that we're looking for the big guys with big budgets and global footprints. As our solution matures and becomes more and more, you know, as we grow and become more mature, we'll definitely be able to offer lower cost solutions to smaller providers. That's definitely on our roadmap going forward. So that's a scale argument. But today we have got a lot to soak up in the tier 1 and tier 2 space. Yeah,
it's interesting because we've got a question on that. You know, is the aim to sell more to each client versus get more clients?
That's cool. So it's both. Of course, it's both. We want to sell more to more clients, and we've got quite a bit of mopping up. I think we've probably represented in 20 of the top 50 mining companies in the world or thereabouts. But particularly when you look at the acquisitions we're doing, we have the client base now. We're clearly continuing to grow that client base, but we want to land and expand. So Sativa gave us another 3 applications which are very relevant to the things we're already doing, very relevant to the customer within the customer, help solve more problems for them. We've already got the procurement contracts in place to be able to extend it. That's a big challenge for a company our size to get procurement approval from the likes of the Rio Tintos and Newmonts of the world. Once you're in, being able to push more down that funnel is really, really important.
And they have a choice of those different categories. Like I would see the real growth here in ESG, environment, social, governance, you know, and for them, you know, that there's a real drive from the investment community in that regard. So for them to be able to produce documents that go back that explain their carbon footprint, I would see a real value. Totally.
And it's growing exponentially, the requirements, and it's done in a very siloed and consultant heavy way at the moment. It's not terribly efficient. You know, people are looking at those things as silos rather than an enterprise approach to how they collect, govern and disclose that information to the market. And it's increasingly risky for them to be disclosing the wrong information. Tailings was a great example. The Church of England, which is a big pension fund out of the UK, essentially sent out a questionnaire to all the mining companies following the tailings disasters. And the mining companies, most of them tried to do the right thing and rushed to answer that, but essentially they were disclosing spreadsheets to the market, which is pretty risky. I mean, their intent was correct, but it puts them in danger of being caught out. And there's a lot of, you know, and since then we've had the Global Tailings Initiative and the Global Tailings Standard now, which they have to implement, which we're looking to support.
Yeah, congratulations. I think it's a fascinating piece of software and a kind of right time, right place. Question here on annual revenue growth. What do you see? Where do you see yourselves in 3 years' time?
Yeah, okay. So our recurring revenue, so I think our revenues this year will probably be about 8 million in total fiscal year. But what we really look at is our recurring revenues. That's about 2.5 million. We can see a path to sort of in a good number of our customers going to the 1 million mark before too long. So I would suspect in 3 years' time, we'd definitely be looking at around that 10 million mark when you look at our current growth rate, aiming for 25 million ARR in the next 3 to 5 years.
Does it have any applications for other industries and sectors? Healthcare?
Absolutely, yeah. So pretty much everything we do is just as applicable in oil and gas. Clearly, that market's taken a bit of a beating lately, but it'll come back in some way, shape, or form. So we're actually taking steps to move into that space now and starting to put some subject matter expertise inside the business as well as our partnerships. We have a really important partnership with SAP globally, and we're in the process of building our relationship with them to take all of our solutions to their whole market globally, which would be mining, oil and gas, mill products, forestry, agriculture, utilities. Anybody that uses a lot of land particularly is in our space.